The last process is a cash and bank, which is practically the shortest. And remember, this is also like inventory. Is this about storage now? Because you keep cash. Is this about security of cash? Either whether it's physical cash or whether it's the cash you have in the bank. How do we spend those money, and how do we ensure that the amount we have in the financial statement is exactly the same amount of cash and bank balance that we have? So that's what we're looking at. So there's no stages of process to look at here. This is just looking about the security of the cash, just like we looked at inventory. The only difference is that cash cannot be damaged in this kind of situation. So I will just look at the risk. The risk is very, very, very popular. I'm sure you can relate with it. The risk is that cash can be stolen. That is what could go wrong. Everybody likes money, so which means once we know the risk, the next thing we are looking at is what will be our control objective. Yeah, and our control objective is also clear, is to ensure that cash is not stolen, which means we're able to keep our cash very safe. Now, this is where we'll spend time. What are the controls that we'll have to put in place, and what will be the test procedure for the auditor? Yeah. So just trying to ensure that cash is not stolen, there's a lot of control we have to put in place, because remember, there are two types of cash that we're talking about. There's a physical cash involved, and there's also bank balance that we are talking about. And whether it's in the bank or is physical cash, it can still be stolen. So what are the controls we have to put in place? So let's start with the physical cash. For the physical cash, we need to ensure that they are kept in a locked space. So physical cash is kept in a locked safe. Very important. That control needs to exist. And how will auditors test that? So auditors should observe and inspect the storage safe to ensure that cash is secure. Right. So that is what auditors would do for that control. Another control that can help us prevent theft of cash is to ensure that we perform regular bank reconciliation for the money in the bank. So for the cash, all we need to do is to keep it and get it locked up. Yeah? But for the ones in the bank, we need to ensure that we perform regular bank reconciliation. Right. And auditors need to check for that. So obtain sample reconciliation statement. And remember, doing the reconciliation is not sufficient. That is just the design. The operation effectiveness is about how you clear those reconciling items, those differences you've identified. How long does it take you to resolve them? So auditors will not just see reconciliation statement and say that, oh, this is good. Beyond that, they now need to ensure that all issues, which are the reconciling items, are promptly followed up and resolved. Yeah, that is when the control is working. And likewise, because if people can just go to the bank and withdraw as they like, that's also a problem. So it's the best practice that check payments are usually authorized by two signatories. Yeah, so payments are authorized by 2 signatories. So one person cannot just withdraw from the company's account. 2 people must approve it, right? So auditors need to just check to ensure that this exists. Yeah, so auditors need to review previous payments and check that 2 people approved the transaction. So 2 people must approve the transaction. Then that is all good. And that is it about cash. Cash is the shortest, very simple. It's majorly about keep physical cash in the log space, very important, and perform bank reconciliation and ensure you have 2 signatories. That is all you need to know on the cash and bank process. And that will be the end of the internal control. Remember where we are coming from. We said the syllabus is broken down into planning an audit, doing an audit, and report the audit. Yeah? And I said everything you do in all of these 3 stages, this stage 1, stage 2, stage 3, is being managed and regulated by the ACCA, yeah, which is what we'll call your audit framework and regulations, which you have learned. Yeah, looking at your ISAs, your independence, yeah, independence and objectivity while you're trying to do any job, right? Your professional ethics and compliance, yeah. We're looking at all of that, yeah. All of that are applicable at all the stages. So you are expected to be professional, you're expected to maintain your independence throughout the stages of the audit, yeah, and make sure that the audits are done in line with international standard on auditing. Plan, and that is your section A. Your planning is your section B. Doing it is internal control and the substantive testing, section C and D. And reporting is section A. Now, we have finished section A, we finished section B, we have now concluded section C. So in my next video, we'll be going into section D, and section D will be on substantive testing, which is arguably another biggest part of the syllabus, substantive testing. Yes, that's what we'll be going to, and I'm going to be showing you how to design substantive test procedure easily. This is a part I know a lot of students struggle a lot, but the way I'm going to handle it, you will never have to struggle. You will always have more than enough substantive procedures for your exams. Until then, keep liking, keep sharing, keep commenting. I'm enjoying it. Let's keep going. See you on another video. Bye now.